Good morning, everybody. Well, the extent of that move yesterday was a little much. Cutting through that pivot low, cut through the 100. A bit of a change from the past pullbacks. I guess a bit larger than the little 3% ones. So market's down 5%, give or take. It kind of stopped in the middle of nowhere. Now the market may have stopped on some support. We'll get to the cues. And little short covering rally or value rally at the end of the day there yesterday. I keep forgetting these charts. Keeping them to myself isn't the idea, that's for sure. So what, the extent of that, and the market, the Dow was down. Oh, remember yesterday I said, well, the way this thing is going down, getting the Dow getting down 1,000 points, and I think it got within maybe 40 points of being down 1,000, something like that. So it was real close. And the buyers stepped up there. So now we've got this move up right into that pivot high there to the left, and it's backed off from that. Notice the wide range bar as it pushed up there. So this is what we call a wide range bar igniting. That happened there at 3 o'clock. And it just kind of went into a grind, and then wide range bar ending. Now, you got the signal that it's ending. It's ending at the right location. Now what? Well, now we wait. It pulled back to the bottom of the wide range bar. That is not the time to buy the dip. Well, it kind of depends on what you mean by what your intentions are of buying the dip. I mean, yesterday buying the dip, I didn't buy it down there, quite honestly. I said it in the room. I mean, it just kind of went down, and I can stretch it out there a bit. It just kind of went down, and all of a sudden, it was just kind of grinding down there. Got all sloppy, and it was at the end of the day, and then boom, right back up. It wasn't any kind of a clean retest pattern. It was a wider bar, but then, it went so far, and maybe it went as far as it did. I mean, we can only assume based on price patterns that it went as far as it did because it was kind of unexpected at that point, the way the pattern formed. I mean, as we look at patterns, they create expectations for those of us that could read them. Now, other people look at things in different ways. If they use indicators to read what the price patterns are doing. I mean, as far as anything that said oversold, it said it early in the day. And so that was meaningless. It just kept going down. But the way it turned here, the momentum was slowing. The pivots were tighter, but it was messy with tails, and it just broke to new lows. So it was more of a surprise as to it happening, and then it just ripped higher. It never pulled back on the 5-minute anyway. It never formed a 1, 2, 3. It never formed a continuation pattern, and so on. Could it be? Well, sure, Ken. Sure, definitely could be shorts covering, and the way it happened abruptly. It could have just been those open orders to cover being triggered because not anyone, but most institutions or traders would have orders in to protect profits. And, that could have just been stops being triggered as it flew up and grind up. And then overnight, it was more of just this grind to push up as it did, and until it reached this pivot high there. And so now we've got this volatile range expansion type of a move down that's violated the trend, and it's no longer an uptrend. Can it rip all the way back up? It doesn't seem likely that it would do that. We've got this Fed meeting tomorrow. When things come down like that, historically, prices just have to settle down. This seasonal period that we are in, the historical pattern is that it drops like it did, and we're not certain that this is over. As far as could this be retested? Sure. But typically you get that drop in September, you get a rally, and then you get the next leg down in October. That sets the low, which could take it, who knows, down here, or it just chops around here. So, we've got this pattern where we've got this big range expansion, and we just have to let things calm down. Now, looking at the weekly chart, we condense information to remove the noise. Not that smaller time frames always have noise, but you can see as it condenses the data, you get a cleaner picture. And we're far from a close. We've still got 3 days, but so far it's violated a prior pivot low, which I look back, and this is the first time that a move lower has broken a prior pivot low. Now, so far it hasn't done it on a closing basis. That's what we'll be looking for, at the end of the week, to see, does it close under that prior pivot low, or do we have a pullback under a prior swing low? And the next swing low isn't that far off. But what we look for here is daily time frame is broken. There's no doubt. This is teetering, but not too bad yet, right? Is that this chops around here and tries to make a turn. And with this weekly chart like that, we could then consider, hey, end of year rally, Christmas rally, call it whatever you want, could get all the way back up to those highs again, and maybe beyond. And, all right. Let's take a look at the spiders. By the way, the SPX getting very, very far away worked. Mentioned in the room, even though the markets went down all day, those strikes, as far as weight as they went out worthless, and they actually lost premium after things calmed down. Just looking at the cash market, which is not encompassing what's happening 24 hours. This type of a pattern is not one in which historically it just, okay, coast is clear, all's done, load the boat. It was just a, weird day. Don't worry about it. No, it's cut down through 2 prior pivot lows, right? After creating a bullish pattern that failed. This is not over. This has to calm down. It has to maybe test the lows, make a higher low. It has to be tested to see, can it take it lower, or is it hold in this area? And so by doing this, we're keeping our bias in perspective of what is historically, not what we think should happen, want to happen, or what someone in the room mentioned. Kramer said, load the boat here. This is done, which is a ridiculous statement. Load the boat on what? But this is what media people do, right? Don't pin them down. And if they tell you what to do, where am I wrong? Where's the stop? You're going to tell me tomorrow how this trade is going? No, of course not. All right, spiders. Right, that's a nasty gap underneath there. And just jiggling down here. How is the VIX doing right now? I got a high RSI trigger this morning. I don't know what RSI trigger is. It means nothing to me. VIX came up to the prior high up there. Simply use it the same way, look to the left, and that's where the market's turned. Take the indicators off, and It'd be a lot easier. Yeah, that doesn't mean anything to me. Batis, not, RSI relative strength doesn't mean anything to me. And eventually, if you're here long enough, it won't mean anything to you. You'll get rid of it. Just look to the left. Look at where it turned before. And so if the market should sell off further, right, we'll just look to, if it's going higher, we'll just look further up, and that'll give you guidance as to where the turning points are. All right. NASDAQ. Let's pull this back a bit there. Came down into this area, actually got pretty darn close to coming down here. But then as things turned, and it popped back up yesterday morning. I said, hey, 15,000. And it closed there after breaking down through it and getting close to the prior low. So, we say maybe close enough for government work. Other things started to turn. So why shouldn't it? But two big nasty bars down. It's stabilizing here. Some type of retest pattern would be great, which is going to take time to unfold. And, the Russell went down with everything else. Stabilization day, whippy, erratic, nothing much. So as far as swing trades here, we don't have any kind of patterns as we're looking at the markets. We'll see what holds up today or what doesn't. But it's going to take time for things to set up as far as swing type of setups. The Dow coming down here as it did, this came down right down to the pivot low, and I pushed through it for a little extra entertainment, and then started to come back up again, as you can see so far inside day. And pull back here so far, damaged, but not completely broken as the daily is. We'll see again how things unfold today. Bitcoin popped up off of the low. You see how consistent this is? We're not looking for perfection here. When I say look to the left to see where prices might turn, where they're going to find support and resistance, the consistency is undeniable. So when you see something that is so accurate, why would you put RSI, MACD, Fibonacci, Elliott wave, GANs, brain damage on your chart when you have something that works? So when you get into an area, you look at smaller time frames, and everything's about multiple time frame alignment, and as far as what the trends are doing. Crude oil. Let's look at this. Changing contracts. Up at resistance, pulling back here, consolidating at resistance, getting a little whippy, and the oil sector stocks, they got whipped around like everything else did. Gold came in, didn't quite get down here yet, but it's in the lower part of the wide range bar so far, at minor resistance. Silver's down at support. See if this begins to hold right at that pivot low, and that's where it's been before, as you can see. So it looks like a point where maybe putting a little toe in the water there and see what happens. It's bounced from there before, it came down kind of hard, but it's not going to rocket up. The transports gap down, but they held pretty much. Now, where are what's quoted day to day? That finally gapped down and broke down below the 200. It didn't close below its open, and it's broken. So obviously bearish. It's gone down below this base, and this is a proxy for the economy. We see that transports moving down. FedEx looks terrible. That continues to go down, and Home Depot, everything got broken. So intermediate term, these are bad signs, and interest rates really didn't do much. just kind of hung there. But at least they're not breaking to the downside here. And yeah, bonds. They turned around, but it wasn't more of a reaction to the negativity. I think something of real significance happened here yesterday. With bonds, it's not like they ripped here. And of course, that would have driven this much lower. And that happening in alignment with transports, that would have been more of a concern intermediate term. But that hasn't happened yet. So markets have some digestion to do of what occurred yesterday. And I guess that'll take a little time. So we'll just see how it unfolds day to day. All yours, Dan. No, the daily trend is not up, Tony. And it depends on what you're talking about. But my rule is, right, it's definitely not up because it violated major support, the low prior to the higher high. It doesn't meet the definition of an uptrend. But in the trend matrix and the ETF letter, and what I've done for many, many years, because not that it's in a downtrend of making lower highs and lower lows yet, but from the point of view of a bias, and this is based on historical patterns, it's better to move my bias to downtrend when something, in this case, SPX, breaks through two prior pivot lows in one move. So unless this has a miracle recovery at the end of, into the end of the week, anything that is broken like this in a momentum move in the ETF matrix, I'm going to move the daily trend to down. And this will move to sideways if it's still below that pivot low. So there is a systematic analysis that goes into analyzing those trends in that matrix. So we do the monthly, weekly, daily, and then for subscribers to follow along, whether they're new or been there for a while. The first column on the weekly and daily, there's two columns on each of those. So the first one is what happened this week, and the second one is last week. So you can see the changes that happen from week to week, and then follow along. Well, if the monthly and the weekly are still up and the daily is turned down, that means keep following the daily until it repairs the damage, and then look for longs. Or, hey, if it evolves into the weekly chart, things are getting worse. So it's, again, a systematic way of following multiple timeframes. I'm doing it for you. Even if you don't look at the chart, you can follow along. To you, Dan.
All right, good morning. All right, so we did a little house cleaning yesterday. So yeah, Greg, if we find some credit spreads, that would be good to get them there. Our advisory letter, this is our only short YALA. We're just in trail mode. And we have 10 or 11 longs or put spreads, and those are all fine. I see Bitcoin kind of flat. Pre-market for index horsemen, just slowly grinding lower, giving up some of their gains. Let's look at some gappers here. I just saw this up on the screen when Greg was talking. Kramer, I don't know what he was talking about, Otis, but things that fall a lot like this vertical make a reversal. They could be a day trade and or 1 to 2 day trade. Quebec Sierra. Oh, this one looks good. All right, let's put that on the bottom right. It's a bottoming pattern, of course, but pre-market is our something bar. Look, it's up here at 2350 at the prior high. But let's see how it sets up. That, this thing could easily go to 30 bucks. I don't know. So that I like. Home builders here, XHB had some housing start numbers pre-market, so they're doing absolutely nothing. XLF got whacked yesterday, as many things did. And I don't personally understand the the macro effect of why we got whacked so much on the Chinese developer. But macro, it's either contagion or, lost profits from our companies as a result, whatever. But I just need somebody to give me a Cliff Note version. This little guy I saw going by the ticker, DATS, recent IPO. It's extended here in a trading range, but that's worth watching. Default may lead to theirs. What's THERS mean? To others? Okay, well, true. And yeah, that's a given. But still answer the question of why that would cause the reaction to our markets as it did. So FCell, we actually had it on our long watch list this day, and it just kept ripping. We never got on board. But another bottoming pattern. I would like this to take another week to set up. FedEx, yeah, that's an ugly downtrend. Today's paper said they're going to be raising their shipping rates 6%. Ryanair Air of an airline, this closes like this. That is a beautiful 1, 2, 3. And talking about relative strength compared to the jets. Now I know Ryanair Air is a foreign company over in Europe, of course. It's the southwest of Europe. One of our 11 longs are Hawaiian Airline, holding well. We also have a out of the money put spread on RC Dell, same leisure sector. ATVI, I read in the paper yesterday, the FTC is going after them for stuff. Uber, I don't know if it was full earnings or just earnings discussions with the CEO was on CNBC. This could turn out to be a nice bottoming pattern entry. Target maybe back up here, 45, 46. I have that on my other computer to watch. Disney got an upgrade, no pattern. CFMS, I think it had earnings, but gapping down a dime, a little penny stock, no interest. Lennar had earnings. Gap down, no great pattern. JRTGTX. You just gotta you gotta decide a couple things. It's a breakout. Is it a quality breakout? Number one, it's kind of just slopping all over the place at this prior high. The market is very iffy. I think it's not juicy enough for me. I'd rather be in cash myself, or see if this Quebec Sierra I like better. Yeah, I think we're gonna have a hard time finding swing setups. AXTA, I think it might have been earnings, but gapping to right where it broke down from. HRI, no pattern. Car had some type of earnings, no pattern. Now, Kerbal had earnings, gapping down 131, gapping down to the bottom of the range. It's going to totally depend what this thing does. There is a lot of support here at 130. A lot. But if it can't bounce for 30 minutes, then that maybe we short a 30-minute low and or call spread. So that looks good if it can't hold. AZO earnings 1630, bullish gap. McGraw, this one's typically spready, but this could be a put spread we can take a look at. APOG, no pattern. Space, that's something Greg mentioned yesterday, a possible bottoming pattern. LBS, I've been watching. Gapping up here, just trying to make the turn on support. This would be Today is Tuesday, so over Friday's high, this would be a good put spread candidate if there's any juice. Bitcoin here doing nothing. Looking up at the fangs, 15-minute Apple. Oh, I lost my pre-market, no wonder. Yeah, so this actually looks very good for a possible day trade. Apple gapping up here to yesterday's high, and it's a bullish consolidation pre-market. So if we decide that we're looking for day trade longs, then one is not bad. Tesla. This one also, this is gapping up, same gap into resistance and going sideways. So this looks like a day trade. It's a totally different daily chart. Thoughts on Tesla 680. I mean, there's no compelling pattern to us. You know, everything starts with, here's the name of the bullish pattern. But if you're just doing it as, hey, a little intraday reversal, it's far away, as long as you have your stop in place, I'm okay with that, Jim. I would maybe wait 10, 15-minute high. Let's let things settle down as always. And so those two day trades. Microsoft. I don't like that one as much. I mean, this was an end of day rally. No, the Apple and Tesla are much better day trades if they 10-minute high, I'll just say. Stan, we're in a put spread on low. There's nothing to do. You know, had a breakout failure, but we got the 200s. It's still a bullish weekly, monthly. There's just nothing to do with it. And Nikola, I still have an alarm. Friday's high. Bottoming pattern, let's see, 1070. Let me make sure. Yeah, got an alarm right at 1070. All right, we're coming in a little bit here, so that's why I chill at the open. My Uber is popping here. Whoa, now that gap looks too big though. Gap's too big, but it's a bullish gap. Remember I said target 46 on the weekly? Looks good. I'm just not chasing. Looking around at my other 15-minute charts. No, eBay, nothing. I mean, an additional problem we have is that most things rallied robustly for the last 30 minutes until yesterday's close. And then with the gap up, that's an end of day rally, which we don't like. We like